The Most Important Thing, Uncommon Sense for the Thoughtful Investor by Howard Marks is one of the classics of investing. Marks, founder of Oaktree Capital Management, shares the investment principles and philosophies that have made him one of the most successful investors in the world. The book emphasizes the importance of thinking deeply, thinking critically, and applying long-term strategies in investing. Here are the key lessons from the book presented in clear sections. 1. The importance of second-level thinking. Different and profound, Howard Marks believes that successful investors need to be able to think differently from the crowd and have depth. This is called second-level thinking. Example of second-order thinking, instead of asking, "Does this company have good earnings?" A second-order investor would ask, "Are these earnings anticipated by the market? And are the current valuations reasonable?" Gaining a competitive advantage, second-order thinking helps investors make different decisions and often leads to superior results. 2. Assessing risk is the key to success. Understanding risk, Marks emphasizes that investing is not just about seeking profits, but also about managing risk. Avoiding big mistakes, one of the best ways to be successful is to avoid big losses. Marks advises investors to always think about what can go wrong and prepare for the worst-case scenario. Risk discipline, understand your risk tolerance and invest within your comfort zone. 3. Market cycles are inevitable. Understanding market cycles, Marks explains that financial markets operate in cycles, sometimes high, sometimes low. Recognizing this helps investors avoid being swept away by the herd mentality. Buy low, sell high. Success comes from buying during periods of fear and selling during periods of greed. This is how to use market cycles to maximize profits. Prognosis, no one can predict cycles exactly, but smart investors always know how to position themselves to take advantage of opportunities when they arise. 4. Intrinsic value and market price. Looking for value, Marks encourages investors to focus on the intrinsic value of assets rather than just looking at market prices. Discrepancy between value and price, when the market price is lower than the intrinsic value, there is an opportunity to invest. Conversely, when the price exceeds the value, be cautious. Be patient and wait. Value investors need to be patient and not let short-term market conditions influence long-term decisions. 5. The importance of margin of safety. Protecting the investment, Marks emphasizes that successful investing is not only about maximizing returns but also minimizing the risk of loss. Margin of safety is an important tool to achieve this. Buy below value. Assets should only be purchased when their prices are significantly lower than their true value, creating a buffer to protect investors from unforeseen fluctuations. 6. The role of market psychology. Markets are not always rational. Marks believes that investor psychology often leads to mispricing. During periods of euphoria, prices are often inflated. During periods of panic, prices often fall sharply. Avoid being influenced by the crowd. Smart investors must stay calm and not be swept away by the crowd psychology. When the market is too optimistic or too pessimistic, it is often a sign of opportunity. 7. Patience and investment discipline. Patiently wait for opportunities. Marks advises investors not to always be active but to be patient and wait for the right opportunity at the right time. Investment discipline, set clear principles and stick to them, even when it goes against emotions or market pressure. Long-term persistence. Successful investing requires a long-term vision and the ability to resist short-term temptations. 8. Self-awareness and know your limits. Know yourself. Investors need to know their limits, from their risk tolerance to their level of understanding of the investment field. Don't be too greedy. Marks reminds that rash decisions often stem from greed or overconfidence. Invest within your knowledge. Focus on what you know well instead of chasing after areas in which you have no experience. Conclusion. Howard Marks' The Most Important Thing is a comprehensive guide for those who want to invest successfully by applying critical thinking, understanding risk, and sticking to a long-term strategy. by focusing on principles such as margin of safety, second-order thinking, and patience. Marks shows investors the way to achieve sustainable success in volatile markets.